where I share my 45 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Tonight's video, we're going to talk about the crumbling of the tariff truce with China, and also the week ahead. We've got unemployment, lots of things to talk about. Let's get into tonight's video. Well, welcome, folks. It is Sunday night. Appreciate everybody showing up, trying to set up the week ahead. We got a lot to talk about. We got employment numbers. We've got all types of issues going on, to say the least. And most importantly, the tariffs seem to be coming back in. Trump is claiming that China's already broken the deal. So where does it go from here? I don't know. It's sort of funny, some of the talk around the street of the taco on Trump for an acronym. I guess he's getting a little bit of his own medicine, but I've certainly been complaining a lot about how all the rhetoric has been handled around the street. This week, it's sort of interesting. I just kind of want to go over a couple things that we're going to have to deal with this week, and then we'll get into talking about some of this chaos that continues to be brought in by the Trump administration. And, it's just more of the same. It's they managed to kind of reboot the system, and then we end up back at the same point each time. But so we've got ISM manufacturing coming in, and that's still below 50. It's expected to be 48.5. But the thing I'm going to want to watch this week as we go through is some of the labor numbers. I don't think the ADP is going to have much impact. We'll get that on Wednesday as usual. But one of the things that I'm looking at here is that initial claims. They're starting to be forecasted a little higher. Pretty much we've been around maybe 225 to 235. They're 237, but the relative forecast is starting to come in a little higher. And then that big number will be continuing claims. And then on Friday, we get unemployment numbers. It's the first full week of June, if you can believe that. It's the first Friday of June. It's hard to believe that we're halfway through this year already. And really, we haven't gone anywhere, right? I mean, the markets are flat for the most part. Yeah, this was, by the way, I don't want to say I told you so, but I did. This was the choppy sideways range. Here we are coming into June. People are still trying to figure out which way we're going. And the answer is we're not going anyway. We're just in this sideways consolidation. And it could end up being a distribution rather than a consolidation. You'll see on the data sheets that I've run for tonight that we are starting to see some signs of deterioration of the market, but you have to give Friday like a really impressive. We rallied like 50-some handles, 55 handles off the lows on Friday. We were well into the lower 58 handle, and we came roaring back and then around 58.60, and there was a big rally. Then right at the end of the day, everybody backed off again, and now we see the market's down about, right now we're down 12 handles. We were down 17. So nothing big here. It's just this continuing of the grinding and no directional trade going on. So let's talk a little bit about this tariff situation. I don't know there's no way to predict what's going to come out of this stuff from the standpoint of, because of the sloppy delivery we've already seen on all of the metrics on the tariffs, or any rhetoric around, they keep claiming they got a deal with the UK. I don't see that as a deal. I don't know what you folks think. I think there's a few areas that they've been able to agree on, but it's a long ways from somebody putting some a pen and ink on a paper to call it a deal, a fully consummated deal. They have deals on segments, but that seems to be all that's been come out of this. And whether if it is that Trump is folding his cards right, as soon as he's taken away, puts it back on, takes away. I don't know if that's part of the game. I don't know. It's kind of not very clear in trying to bring up markets. But if you look at the markets, that's what we've been seeing, back and forth and just this consolidation. This is the final month of this second quarter. I promise you, it may be possible. I'll look at the charts, and maybe tomorrow night that I'll do the longer term outlook. We'll have first full day of June trading, so I should be able to put all the calculations together. So I will take a look at how that goes, and I'll just watch for the title for tomorrow. It'll even be tomorrow night or Tuesday. As far as anything significant going on, I don't see any trigger points unless the labor is starting to soften up a little bit, and that maybe will come through maybe with the ADP numbers as well as the employment numbers we get on Friday and the continuing claims, and all of those are that's going to be the focus this week. There is some earlier news coming out in the week, but I just don't see. I think it's just going to be really choppy here, folks. I'm not getting the algos are still kind of waning, and you'll see here in a minute, and we'll go through the WaveTech database on an intermediate level, and we got a little bit of traction going, and we pushed up a little bit more than the 42 handle on there, so that's a good thing. So I think we'll just go ahead and get into that. I apologize for the a little bit late start, and you live to. I went to Mac last year, and I changed some cables around, trying to reconfigure something, and it disconnected all my cameras. So I had to reset up cameras in the studio. So anyway, that's why I was late. All right, let's go ahead and let's take a look at the WaveTech database. Good, all the cameras are working. So this is the current scenario. We've got 43.54% long. That's above that 42%. So we're in what's considered the early traction mode, where we've got enough traction where 4 out of 10 stocks are trending now. When we get these buy signals, that doesn't mean it's over some simple 200-day moving average or something like that. I know people use that as a metric. It's not a good one, but it does give you some information, but it's not very good. Everything that you see here is there's 6,375 symbols that have been indicated to have a trend and have forward-looking probabilities. And since this is the intermediate, roughly expectations for 42% of the market which would be to be in position to rally for maybe next 200 plus days, which is the better part of the year. So now all of a sudden we're starting to build a little forward outlook from the standpoint of carrying us. We're here coming into June, so that would put us well into April, May next year on 40% of the companies out there. These stats can fail from here. Really need to get above the 48 to 52 window to get some concrete. So now we've got a good position so we can get some rotation, still stay above the 40, 42, 48 level, and then move forward. So we're still in a bit of the temporary zone. We'll just say the very bottom minimum that we have to have. I've talked to you folks about having this basic structure or foundation for the markets to build off of. You can't do it with 7 stocks or even 30 stocks. You need hundreds. Now we've got 6,375 symbols out of the 14,641 in the database. So that's starting to be, that's, like I said, the minimal that we need to do. Let's take a quick look at the, go over to the daily stats here just for a minute. So daily is now, I'll move this in so you can see it a bit better, is at 66 and a half. And we've got, right now we've got 9,736 symbols in a long position. I'm going to bring you over to this positions overview, and this shows right now that our current duration's 14 days in average across those symbols, those almost 10,000 symbols. Typically, average days long is 39, and duration for filled right now is 0.36. So we're still early in that, even in the from the standpoint of the short-term database. So there's some decent traction here, and that's why, if you recall on Friday, I was talking about there's no big collapses or anything going to happen out of this type of environment, but it can just continue to grind through. There's going to be some great trade. Typically, when we start to pick up out of a full liquidation mode, which we were in several weeks ago when the markets are at the lows, we bought, I think, 6,000 or 7,000 symbols during that bottoming phase after the Liberation Day spike and volatility spike, because Liberation Day had I think 11, almost 12% range for one day, and we pretty much stayed around the top end to the top third of that range for the next couple of weeks. But during that time, we saw a lot of symbols come back in. So that foundation on a short-term level has been built pretty good. Like I said, 66%. Typically 68, 72 is about as far as it goes. It will kick up to around 78 plus, but that's full, what we call fully invested at that stage. Right now we're solid in the trend maintenance mode from the standpoint of being above that 62% level. So that's going to keep things pretty solid here. So no disasters coming at this time, unless they can drop a few more balls on these tariffs and things like that. I don't think they're going to want to shake the markets too much on this. We'll see what kind of rhetoric comes around, but I think this week is going to be somewhat typical of the news that we have coming out. We've got some interesting news, that especially the employment, because that's going to be the whole focus. If you watch the commentary goes through the week, that's what everybody's going to be talking about. They'll mix in a little ADP report, the claims, and then ultimately on the unemployment numbers coming in. I suspect they're going to be fairly stable. And so far, just a quick comment, we really haven't had any of those big moments where there was any kind of disruption came in because of any of these numbers. So yeah, one of my old mentors, he said, expect more of the same until they show you something different. And we've been getting pretty much the same stuff all year. Okay, so let's go ahead and we'll move over to the S&P. I'm going to stick to the short term because I'm going to focus tomorrow night on a longer term. I suspect I'll have all the numbers I need to be able to do the long term first of the month review that I always do. So let's go ahead and take a look here on the daily. And I mentioned this, I think, on Friday, as I recall. It may even been in the Substack. And if you don't have the Substack, get it. You get 8 trade recommendations every day, the data sheets, and you get lots of micro view of the world. So it's kendallreport.substack.com, and it's $8 a month. There is now an $80 option for a full year, so make sure you check that out. Anyway, we've been flat. We can go all the way back here to May 14th, all the way to today, we've been basically in a range. We spiked under it. Most of the time, almost every high was at the same level in this 59 handle. We're still hanging right at 5,900 even right now, down 15 handles. But if I just went across these like right here, let me just bring that up. But the high 59.28, I'm just going to do a couple of these. 77, we got up to 93. We printed 60. Where was it here? Let me find it. 6,008. We did get over the six into the six handle, and it just kicked out of there. And here we are, just following. If you remember, going back a week ago, all the algos were forecasting this flat forecast, right along flat lines. So we're staying within the context of all these moving averages, and you can see that the dotted lines out here are the forecast for what these moving averages are going to do. It looks like there's ultimately a convergence of some sort all the way into mid to late July. So we could be smack into the dog days of summer here and just kind of waffling around. We do have all the stuff going on with tariffs and stuff like that. So we'll have to see if we can get any volatility. Right now, it looks like ridiculously flat. And just make a quick comment here on the Fed is like a non-factor right now. I do believe, I think it's the 18th and 19th of this month, I'll verify those dates, is the next Fed meeting. They're not going to do anything. It's just going to be flat. So, but you can see, this is coming into a very boring forecast. We'll see how we get through this. And meanwhile, like I said, if we just back up, look in the rear view mirror for a minute, we've got a solid database, 66% on the short term, 43% on the intermediate. So there's going to be movement, but it might be off the radar stuff that you're looking at. And the Mag 7 may not be moving that much, but there's going to be definitely some other things. So those of you that have Wave Tech, you'll be able to see some of that rotation as it comes in daily. All right, so we'll stick with this. I'm going to try to, since I got a late start today, I'll try to still finish on the hour tonight. And we'll just go forward here. Let's take a look at the NASDAQ. Oh, wait, before I do that, I did, this is the data sheet for today. And let me just move that over so you can see it. So we have 60% consolidating is the forecast on the data sheet. Nothing stands out. Mixed PPM readings. This is what I'm telling you here is this thing's very flat. We have a negative PPM1 right here. That's the only negative. Everything else is right now in maintenance mode. This M here, if you look at the legend just below, M is for maintenance. Strong uptrend, you get double plus with a T. We got neutral on PPM1. It's negative but above 0.15. So everything's really neutralized. If we just kind of blow up and we look at the expectations here for the market grid here, R1 59.35 projected high, S1 58.93, so that would be fairly narrow. Expansion would be to 58, 59, 58 on the upside. On the downside, 58.69. I'd be leaning a little bit to the negative side. I think there's some pressure to come in, but that's your range, basically R1, S1 possibility on the expansion if some things start to come into play. As far as there's a breakout buy, let me just bring this in just a little bit so we can see this. Buy the support, 58.93, so that would make sense. You still have positive PPMs, underlying PPMs that you would be looking to buy the S1 level, target 59.35, which is R1, so that's playing the range of the day. If we hit R1 first, then you can play the opposite side of that. The other breakout scenario would we'd break above that R1 level, and we could go to 59.58, which would be R2 on this pattern. All right, now we'll move on. Let's go to NASDAQ. NASDAQ drifting a little bit lower. NASDAQ always has just a slightly higher beta. In the Substack, I usually try to contrast what's going on between the cousins of S&P and NASDAQ. NASDAQ's a higher beta, more tech weighted, as we all know, but it does have a bit higher volatility level. So, but all the algos here are starting to fade. Even the spike on PPM3 that was being projected has moderated substantially. So the 200 is still in play here. We have the 21. Let me get this value for you. The 21 right now is 20,955, and then the 200, 20,502. So that's going to be any weakness. That's going to be where you're going to look for first support at the 20,955, and then next level would be at all the way to the 200 would be where we'd end up from there. So I think what we'll do tonight is I will touch on the treasuries as we come into the week. This will be a big week. We get employment numbers and those type of things. And then we'll do the dollar, gold, Bitcoin, and call it quits. What I've been forecasting for the 10-year is that we are going to come back into the 440 range. We're starting to break in there now. We're looking at, we closed 442. I think we come all the way back into this, it'd be the 40-day moving average, be right here. I'll blow it up so you can see it. That would be 4.35. The extreme on the downside would be 4.25. I just think we end up in this range here as we go forward. There's still a slight upslope to this, and that's probably likely, but we're going to come down into this 430 handle and just kind of stabilize in here. Like I said, we've got the Fed meeting coming in, so everybody's going to be at some stage next week. We'll start looking at those numbers and what to expect from there. I'm just going to pop the weekly up here for a minute. So it's interesting because I've talked about this before. The ultimate forecast we do have, we have these big Fibonacci targets that I talked about a while back, way up here at 510, 511, all the way up to 550 and ultimately 580. I don't think these are in play right now. If we look at what's being forecasted here on the algos, everything's starting to normalize and get back to 410, 415, 420 range. Nothing big, just kind of a drifting lower. All the algos are stabilizing. They're not confirming this upward projection. We'll see what happens in the next several weeks, but it doesn't look like there's anything to worry about here. So let's just segue right to the Dow here. And the Dow is going to be drifting a lower while is what's being forecast. This is a weekly. We got strong resistance right here. We do have an upward channel building in the market grid, which tells us we could ultimately head toward this, 99 level. The 200 is right now 103. That's not in play, but we easily could get to the 100, 99.5, 100 level would be reasonable. The red dot forecast is telling us that we're going to stay below the 10, and that would make sense. The 10 right now, let me just pull this up so you can see the value over here, is minus 0.47. that's a pretty substantial downtrend. So anything, whenever the market gets, see if I can get this over in a spot. Yeah, you see this big downsloping 10, these dots are the 10. We're likely going to stay under the 10, and that will keep us well under that 100 level. More like 99, 98 is going to be resistance. So we're just going to continue in this line, I think, for a number of weeks, which is somewhat in sync with what's going on with the 10-year as well. Yeah, pretty quiet on the chat line. You guys are pretty quiet. So here's gold. This is that pattern that I've been talking about. So gold is doing that normalization, that contraction that I always talk about. Let me draw this in just to remind you. So we're getting this pattern right here where the market grid is just kind of trying to come in. Meanwhile, the markets are expanding. Finally, we got a flat here and we got a downtrend here. I suspect over the next couple of weeks, we're going to get into a triangle. You can see right here where the red dot is. I'll just circle it right there. That is pointing to the upside, staying above that 10-period moving average. I've told you this is our weekly gold. Anytime you get close to SMA 10-week, that it's going to be a buy. The probabilities are quite high that we'll hold around that area and typically bounce back into where this market grid is starting to collapse around it and normalize it. And you can see the forecast that would go out a while may not have a lot of validity, but at least out the next, maybe 4 to 8 weeks, we're going to see this line really be a substantial place to pay attention. Let's just close this out and let's look at the, so I pointed this out before. Even at the lowest projection out to the end of June, even this dip on the indicator is still trend mode, even though it's crossing its first, second derivative. We may be able to get through the 10 and trade down toward this 21 week, but it's highly unlikely at this time. I think this red dots have got it pegged here, and that's most likely what you're going to see. All right, this is starting to get interesting. We'll go to Bitcoin. Bitcoin is trying to roll over. There's still a substantial angle of attack here. This is a weekly chart, and we've got PPMs well into the, I'll blow this up so you can see 2.46, 0.56, and 1.3 on 0.56 on PPM2. And if we come in just a little bit to PPM3 is still at 1.39. That's huge. So all of the underlying trends in this market are substantial. So I don't see the collapse. We did get below that 105 number. So far, we've held the 100 level. Take a look. This is weekly last week. $103.27 was the low, so that'll be your low water mark. But if we look at the market grid on the weekly, 97 is the extreme, S2 is 101. Maybe we can trade down there. The lows last week, 103. I'd watch those numbers, and really it's just a 100 number. If we get below that, then that would not be good. But this upward slope on this 10-week moving average is way more than enough to hold things together. So just know that good underlying trend, some volatility set up. The market grid is turned down, a little mini channel. Depending how we close, if we close higher this week, then that'll turn back up, maybe even get what I call a box formation where it just goes flat. A little more noisy on the daily. We do have some Fibonacci targets here. 97,600 is a minimum fib target. This is likely just to be, looks like we've got a little weakness coming in. And like I said, toward the mid to end of this month, we've got still plenty of upward move to kind of contain this thing. Can we make a new high from here? I'm not sure, but I'm telling you, as I've said before, this is the point in time that you really want this market to run. If it can't run right now, then that's a bit of a problem. And I'm a little disappointed that we were able to print, I believe it was a 112 high. We broke over that 109, the old high that we ground through for months. And then there's no old trading term, there's no VIG there. So no one was looking to buy the breakout. In fact, I think all the ETF guys and all the option and futures and everybody was just playing the arbitrage, and that's what I've been worried about in a cycle of this. All right, so 30 minutes. I am going to finish early tonight. Just taking a look at, actually, there's a reasonable amount of folks there. That's funny. All right, just looking here. Yeah, not a lot of comments, folks. I'll just summarize. See somebody talking about overbought. I don't know what that means. After 45 years, I never figured out overbought, oversold. The best bull markets are usually overbought or bear. They're oversold. They just kind of go on and on. That's why I don't use any of the what I call 0 to 100 meters, RSI or stochastics or any of those type of measurements. I just don't see them useful in my thought process. Might be for yours, and that's good, right? I always tell everybody, I trade what you know, and so yeah, I think this week there's enough news coming at us that it will be interesting. I just don't know if we're going to get any noise out of the White House or not. And, that's unpredictable. I saw some things that Scott Bessick was saying that the relations or the talks with China seem to have stalled. Well, if you're not threatening, but if you're blaming them for breaking something, then kind of hard to talk. Anybody's ever had a girlfriend or a wife or the other way around knows there's boundaries, and once you cross them, it's not the same after that. So anyway, folks, I'm gonna call it quits here tonight. I know we only went for about 33 minutes. I'll have a much longer and in-depth show tomorrow. We'll go into the long-term aspects of things. Let me give. Somebody's asking a question. I'm going to answer this. I'm amazed that you don't use glasses. What's your secret? It's kind of interesting. Not using glasses actually keeps your eyes strong. I actually I had cataracts. I almost cured all my cataracts by doing something at sunset. The rays are the longest. You look straight into the sun and move your eyes back and forth and around. The cloudiness is like 80% gone. My eye doctor was talking about this. Technically speaking, when I'm in my range here, but I never wear glasses. It seems to maintain the strength of my eyes. And now that I've got the cataracts subsiding, it's pretty amazing, because you get old, you'll get this cloudiness, and that looking into the sun, it's got to be right at the 10 minutes before the sunset, and you just look back and forth and around, and I do it most days that I can catch that, and it really works. So interesting talk. I do have some reading glasses, but the nice thing about the Mac is you can zoom in and out too. So I just kind of compensate. I come from a school, you got to exercise your muscles, same thing with your eyes, just let them work, and they'll work hard to adjust. Thoughts from an old man. All right, folks, have a great day trading tomorrow. I'll see you tomorrow night. We'll do some long-term analysis. Definitely it'll probably be a popcorn night. There's a lot of things starting to evolve here, because I have been talking about weakness coming into Q3 and 4. And I think we're going to start to see some of that picture unfold over the next 4 to 6 weeks. Anyway, have a great night. Also working on putting just a video together with some of the new music that I've been working on. All right, folks, we'll talk to you soon.